Don't confuse your employer plan type with the investment account type. There are about 4 main account type choices, and one or more of those could be a good fit for you. Hello, Wealth Champions. I'm Tony Whaley, a financial planner brought to you by Paladin Advisor Group, where we care about your whole life as it relates to your financial well-being. So, what are the 4 choices that you may have to invest in through your employer's retirement plan? Well, your employer's retirement plan may not have all 4, but a robust plan will at least give you a couple of these options. So let's look at them now. These 4 sections represent the base function of the account type. They also telegraph the type of company that is behind the account type. The first quadrant is insurance. These are more than likely an annuity backed by an insurance company. There are many different types of annuities with varying fee structures and rules. So, you need to pay special attention to the contract details when considering this account type. The details will include, but are not limited to, fees, charges, and other expenses, or maybe charge periods. Please consult your financial professional and ask about these and other questions that you might have. Now, the second quadrant is mutual funds, do-it-yourself, DIY. If this account type is available, it will be used by the more sophisticated investor. The participants who invest on their own actually spend time researching and understanding how to create a portfolio that meets their needs. They also continue making changes as necessary, and they are consistent in this practice. So typically, the do-it-yourself indicates that there is no professional help offered for these accounts. There may be an 800 number to call so the DIYer can get some general questions answered or other limited service when it's needed. The investments that fall under this category may include also target date funds, family fund choices, and possibly index funds. The third quadrant is mutual funds with help. This option is available as either an overlay to the DIY fund selection, or maybe it's an entirely new option with its own investment lineup. Typically, there is an advisor that will provide investment advice and other types of individualized services needed for your investment life. Now, this advisor could be an employee of the investment company, or if they are independent, maybe they're paid in some other way, maybe through fees or commissions. Additionally, there are also appropriate situations when an employee may hire their own advisor and pay them a percentage of the account value, maybe as a retainer. Please ask questions about how your advisor is compensated. We always encourage our clients to know this upfront. The fourth quadrant is managed money. This option is also referred to as a managed portfolio. There are several types of management strategies that might be offered. Investors need to be fully informed, so ask. The term managed refers to rebalancing, reallocating, and reassessing the portfolio on a regular basis. This relationship is more connected in nature than the others that we've been discussing so far. In this type of arrangement, the investor relies heavily on the portfolio manager to see that the portfolio is being kept in line with the risk tolerance levels and the return expectations of the investor. Investors pay for these services through annual asset fees or some other account or custodial fees. Now, as I said before, a robust employer plan will be offering something in each of these quadrants for their employees to consider. And these are not the only types available to employees. These are just the most common types that we see. An employee could focus on one area or have an account open in more than one of the account types found in the quadrants. Sometimes mixing and matching from the different quadrants helps a participant increase their chances of capturing returns while possibly lowering their risk of investment loss. For each of these account types, we encourage you to read the fine print and ask questions until you have a good understanding of how your account would work for you in each of the offerings in the plan. And while considering what type of account suits you best, see what you can do to construct your account strategy as unique as you are. Be prepared and willing to look within and outside of the employer plan to make sure you have your path to retirement set in a way that will serve and satisfy you. So that's it for today. Remember, keep being the champion of your financial life.